Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's start straight with our movers and shakers and all the top buzzers at this point of time. Rima, you're tracking the L&T twins?
Yes, so let me start with the bigger mover, and that is L&T Technology. So as we speak, that stock has seen a gain of close to about 10% and more. The key positive is that it was a big beat coming through on revenues as well as on the margin performance. So revenues have come in at 4% versus estimates of a 2.8% growth. In constant currency terms, it's a growth of 5.5% sequentially, over 32% on a year-on-year basis, and it's a broad-based growth. EBITDA margins have come in at 17% and profits have improved by 24.4%. Now, the management guidance is that for FY19, we will at least do a 16% growth. Now, when you've started with such a strong quarter with 32% growth in Q1, most analysts believe that that 16% guidance is very conservative. CLSA expects the company to actually do 22% growth in FY19. This is the trend, how the dollar revenue of the company has performed in the last few quarters. So from single digits, it's now averaging more than 30% in the last 2 quarters. Other positives include that their high margin process industry vertical is doing well. Their digital pipeline is strong. It contributes 31% to the overall revenues. The company won 5 multi-million-dollar deals in Q1. Brokerages are positive. Edelweiss target price at 1721, CLSA at 1750. But United Spirits on our radar, weak numbers, but the stock is recovered from the day's low. In the green as we speak. The conference call is underway. Let's cut across.
Flat after adjusting for the operating model changes. During the quarter, we have delivered underlying gross margin improvement of 266 bips, fueled by productivity savings, pricing, and better mix. And that has enabled us to more than offset the adverse impact of inflation and GST. In fact, the continuing improvement in gross margin and that journey is something that we are particularly pleased about. The gross profit improvement has allowed us to continue to accelerate investment behind our brands, and you would have seen that this quarter we continued the journey of enhancing our marketing investment, which was up by 30%. And specifically in this quarter, we invested aggressively behind 2 big opportunities that present themselves this quarter, IPL and the FIFA World Cup. Despite the increased marketing investment and the investments that we have made in improving our factories in the current quarter, we achieved an underlying EBITDA margin improvement of 127 bips versus the previous year. We continue to bring in financing cost efficiencies through lower debt, improved mix, and better rates. And our interest cost, therefore, for the quarter was down 20%. The profit after tax for the quarter was 81 crores, up 29%, primarily as a result of improving operating performance combined with lower interest costs during the quarter. I'd also like to touch upon our recent decision to acquire a 26% stake in HipBar. HipBar is a technology startup, and you all know how important this space is for the future. So it's a technology startup in the alcohol space that aims to solve some of the logistical issues faced by consumers in our industry, and that's to do with accessibility. It offers them home delivery, store pickup, and a digital wallet, depending on the area in which they live, and enables online age verification, thereby improving compliance, which is a plus for the regulators. Currently, HipBar operates in Bangalore and Chennai, and we want to support their ambition to expand in other states. And I would encourage actually each of you to check out the HipBar app if you're based in these cities or when it launches somewhere near where you live. I also want to take this opportunity today to touch upon some rumors and unsubstantiated claims that have been plaguing our industry as well as United Spirits over the last couple of weeks. And this has impacted our stock price more recently. The first one is the possibility of ENA coming under GST. Now, it's interesting that there was so much of speculation on this, but, there was not even a reference to the matter during the most recent GST Council meeting on the 21st of July. In fact, it wasn't even on the agenda. Now, while we can't control the final decision, I have to say this, that the industry is continuing to work with key state governments to provide them the relevant data-based arguments against the inclusion of ENA in GST. And I can tell you that there are several states and very, very senior ministers in states who are favorably disposed to opposing the inclusion of ENA under GST. Similar to this, last week, there was another media article that one of the incumbents in our larger industry was liable to pay GST on the surplus profit received from its contract manufacturing. Okay, and this was something passed by the Authority of Advanced Ruling, the AAR, in Karnataka. It not only was interpreted to also extend to us, but its potential impact was also grossly overestimated. I want to clarify that this ruling is not binding on us. There are multiple rulings by the tax tribunal in the past, including a ruling by the Supreme Court, which clearly upheld that the surplus is not taxable. Basis this and the legal opinions that we have received, we remain confident so as to maintain that position. I would like to reiterate that the financial performance of the company has steadily improved over the last few years, despite all the challenges that we have spoken about in the macro environment. Looking ahead, we will continue to pursue our strategy and invest behind our brands as our P&L now allows us to do that. And hopefully get another step closer to our ambition of our medium-term ambition of double-digit growth and delivering mid to high-teen margins. So with that opening comments, I'm opening up the lines for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1.
All right, that is the management of United Spirits reiterating their medium-term target of achieving double-digit growth and mid to high teens in terms of margins. That is the guidance United Spirits has laid out over the medium term, and the company believes they're on track for that. The stock is higher by close to about 1%, pretty sharp intraday recovery, at least in the morning trade. And that's the kind of market we are in, that even when the numbers are not so great, they're not selling off, unlike, say, last week. We'll slip into a very short break then on that note. On the other side, we'll get chatting with Ramesh Kumar Dua, the Managing Director of Relaxo Footwear. Stay tuned.
Well, it's that sort of day. Stocks are just flying away. We have Idea now that's been a relative underperformer. That stock is up nearly around 15% as we speak. So let's get that one, in fact, up for you on the screen. It's moving higher. And in fact, it's moving higher on very, very large volumes. Well, let's talk about Relaxo Footwear. The stock is in focus on the back of the GST Council increasing the threshold limit on sales of shoes from around 500 rupees to around 1,000 rupees, and they're bringing that under the 5% bracket. To understand this and more, we have Mr. Ramesh Kumar Dua, the MD of the company, who joins us. Hi, Mr. Dua. Thanks so much, sir, for joining in. If you could help us out with a few details, what proportion of your sales were under the 500 rupee category, and how much of it is between 500 to around 1,000? And now, post this increase from 500 to 1,000, what is the total proportion of your sales that comes under this 5% GST mark?
Currently, our sale up to 500 MRP is around 70%, and from 500 to 1,000 is around 15 to 20%.
So now the benefit will be on 15 to 20% of your sales, which were in the 500 to 1,000 rupee bracket, which will now be taxed at 5% GST versus an earlier 18%, right?
Yeah.
Okay. Will you pass on the benefit to your customers by cutting prices?
Yeah. We will be passing on the benefit to consumers. We have to remain competitive in the market, and it will be benefit for the consumers.
Okay, so if you're going to be passing on the benefits, sir, then what kind of volume numbers are you looking at? I believe last year you were doing double digit, maybe around 10 to around 14% approximately. What's the outlook in terms of volumes? Can you maintain a double digit this year? Do you have any target in mind?
Yeah. This year also we'll maintain double digit growth, good double digit growth. Good
double digit, that will be higher teens?
I think this will be helping us, this move of government bringing down the tax rate from 18 to 15%. So
no,
in this category from 500 to 1,000,
right,
our growth will be double digit.
Right, Mr. Dua, we're asking you is, in terms of volume growth, you said double digit for sure. So the counter question is it going to be high teens? Could you do 15% or more than that in terms of volumes?
We hope so, but let us see how the whole industry reacts to it. Okay. So we would like to keep our rates competitive so that we sustain our growth.
Okay. So Relaxo footwear will remain competitive. What about input costs? Crude oil prices are rising higher. Do you expect pressure on your input costs, which could hurt the company's margins?
Well, we have to wait and see.
No, as of now, the situation.
As of now, because of this GST becoming 5% for this category, things are better looking.
But you're going to pass it on, right, to your customers. It's not going to benefit the company's P&L because you're not going to retain the benefit.
No, indirectly, when our rates are competitive, our turnover goes up, our bottom line also in the...
No, that point is taken, sir. If you could just tell us, say up until now, since the start of the year, in the first 4 months, how much higher are your raw material costs, say, compared to a year ago?
No, the way, whatever it is, we are always making our pricing accordingly, keeping in view the raw material prices. So we always try to remain competitive. So based on our input cost, every quarter we review our prices of the ultimate articles.
Mr. Dua.
So whatever way the raw material comes, we will, organize ourselves accordingly.
Mr. Dua, Q4 was splendid. FY18, we saw margin expansion of around 150 basis points. Short point, 15.5% margins. You can hold on to those levels?
I think we'll be able to.
Okay, all right. So that's about the margins. Sir, more industry-wide question. Out of the total industry, how much of it is organized, how much of it is unorganized, as per you?
I'll call it just a guesswork kind of a thing because that is not available.
A broad range, sir.
70% is unorganized.
70% is unorganized.
Okay.
Yeah.
Okay. Mr. Dua, now that the tax is going to be uniform till 1,000 rupees versus earlier, say, 500 rupees, would you look to increase the average selling price of your shoes? Will the company look at more premiumization and, perhaps inch closer to that 500 to 1,000 rupee mark?
Well, definitely this up to 1,000 we have more opportunity to introduce more articles accordingly. But we have to see all the price points to be covered for the ultimate consumer, depending on what is the need of the market.
Okay, all right. Mr. Dua, what is your total capacity that you have currently?
Capacity in what terms?
In, million, in volume terms, million pairs, if you could tell us.
I think 600,000 pairs daily we can manufacture.
Okay, so on an annual basis, that would work out to?
I think...
200 million?
200, almost 200 million.
200 million pairs a year is what you can manufacture. Do you have more capacity that's coming on stream, and what is the capacity utilization levels you're working at currently?
Currently, our utilization level is around 65% or 70%.
Okay, 65%.
70%.
Okay, so you don't have any plans of adding more capacity?
No, already this quarter we have started one plant in Bhiwadi.
Okay. And including
So
that,
capacity is also,
including that, your capacity is 200 million.
It can be little more also because we have already factories there, some lines we have put in.
All right.
So need base, we can further add our capacity as
All
and
right.
when we grow.
All right, Mr. Dua, we'll...
All right, just one final question, sir. You know, there's you have VLS as an investor in the company. Any communication from them, whether or not they are holding that stake, whether they have trimmed their stake in the company?
No, we don't have any information about that.
Okay, all right. Thanks so much, Mr. Dua, for stopping by and, in fact, giving us all those details then. Well, keep an eye out on the Nifty. Just in the last few minutes, there's some selling on the Nifty Bank. So though we have, you know, the broad index that's holding well in the green, stocks like Kotak Mahindra Bank, Axis Bank, they have seen some selling pressure. Even SBI has moved virtually to the low point of the day. And in an otherwise strong market, you have suddenly the Nifty giving up close to around 15 points from the top, primarily because some of these banking stocks, they have come in for some selling. Let's pull a day chart out. That's a month chart. I don't think we should get that up for you. Let's get the intraday chart of some of these stocks. Yes, the banking names, they're getting a bit of a back. Even ICICI Bank, that had pulled back towards the 280 odd level, that's seen a bit of a downtick as well. And that's really putting pressure on the Nifty as we speak. So keep an eye out on a couple of these stocks. We'll slip into a short break. You come back, we'll tell you how to trade the Nifty. Ashwini Gujral and Rajat Bose will be with us.